You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the SPIX Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIX. Learn more about SPIX at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it is time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting, at least we hope so, the Options Insider Radio Network, back from the CBOE Risk Management Conference here this week with some interesting nuggets to share and, of course, a lot to break down as the markets continue to melt down here day after day, week after week. We saw a little bit of mitigation earlier in the week when the Fed decided to effectively empty the chamber and use up all of their remaining bullets, or pretty much most of them. The market paused for a moment in their sell-off and then turned back around to the dark side. And, of course, we find ourselves there a few days later. Of course, you guys, as always, can get the show live every Friday, 1 p.m. Central, 2 p.m. Eastern, via the old Mixlers after the fact on your device of choice. We don't judge. However you listen, make sure you send in those questions, those comments, those insights, those pearls of wisdom. We do indeed like to hear from you guys. And joining me, I'm pleased to say, in the studio, it's been a little while since we've had him on the old show, our old friend, the once and indeed future Dr. VVIX, a.k.a. Mr. Russell Rhoads, the Director of Derivatives Research over there at the TABB Group. Mr. Rhoads, welcome back to the program. Nice to see you in person, sir.
Wonderful. Just absolutely wonderful to be here. I bought myself a new sweater vest.
I can see that. You're looking very academic, very fancy.
And because everybody wears colored glasses now, I've gone to contacts.
There you go. There you go.
I'm changing myself all around.
Take one step forward in the world of academia and one step back. You got the sweater vest going.
I got the sweater vest
You look like a director of derivatives. Add the glasses back in. You'll be good to go. Speaking of good to go, we'll be joined by the greasiest of meatballs in a few minutes, but let's not wait for him. Let's dive right in with a little bit of the old volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Vol Review, the portion of the show where we, surprise, surprise, review the volatility that's been on the tape all week coming into today. And guess what? There has been a lot of them. Interesting. We'll get to our crystal ball prognostications in a little bit. Simon, the Spike's father, actually not faring too poorly right now. The best of a bunch of all losers. We all lost this week, but he lost the least, at least right now. Of course, coming into the start of the show, we're seeing Spikes at about a 46.70. That puts it up, let's see here, that puts it up, about pretty much almost unched, actually almost exactly unched, eerily enough, from where it was this time last show. And our old friend VIX Cash a little bit north of the 46 handle. That puts it pretty much unched as well from exactly where it was last show as well. It was up about 48.5 coming into the show, hit a high of nearly 49.5 earlier today before giving a lot of that back. Of course, we're seeing most of the major indices firmly in the green, though perhaps not quite as, or excuse me, firmly in the red. All the bulls out there got excited for a second. Firmly in the red, though perhaps not quite as red as they were earlier in the session. S&P just ticked down exactly 3% as we speak, listeners. The NASDAQ off about 3.25%, and the Dow, ever the laggard, off 2.25%. Crude just getting annihilated. WTI at 42, listeners, off 8%, nearly 4 handles right now. Only green on that screen is gold, up about 5 handles north, well north of that 1600 level at 1672. So a little bit of gold lifting, but everything else looking down, except for the volatility of volatility. That's at right around a 127 right now, which is, I think you can fairly say, in the frothy, in the turbulent end of the spectrum. It's pretty close actually to where it was this time last show, up about fractionally compared to where it was this time last show. So a lot for us to parse. Actually, VVIX just ticked up since even the start of the show. It's almost at a 130 right now, 129.86 or so. So that puts it up about 3 handles from where it was this time last show. So a lot of things moving even as the show is progressing. But Mr. Once and Future, Dr. VIX, it's been a while since you joined us on the show. I'm not sure if you're aware, because I know you got your nose to the grindstone over there in TABB land cranking out your research, but a little volatility has been happening in the space since the last time we spoke. So walk us through what's been catching your eye. I know you're the keeper of a lot of historical volatility data, and you like to look at things from a broad historical perspective. What really stands out to you as you're looking at these somewhat aberrant events we're seeing of late, sir? What's really resonating to you right now?
Well, a couple of things that were standing out, and VVIX, it's up, 10 points today? The way that it was kind of hanging in there at lower levels was giving me a little hope for the equity market, but that reversed itself. Prepping for the show, and I normally put hours into prepping when you have me on. It's useless unless you just do it 5 minutes before the program starts.
That's the challenge with vol views. You can't really prep more than 10 minutes ahead of time. People always ask us for the notes ahead of time. They want to come on so they can see what we're talking about. And I say the earliest you could possibly get any outline is about an hour ahead of time, because everything changes moment by moment.
Well, it used to be when I was on here like every week, we could plan 3 days in advance, because VIX was lower than both of my kids' ages.
The heady days of 2017 when VIX was sub 10 and stayed there for 6 months.
The things that are standing out, and needless to say, the backwardation, but the level of backwardation has been absolutely ridiculous. I've gotten people reach out to me when they got questions on VIX still, which I greatly appreciate. And I got a lot of do you think it's time to short VIX? And I was like, as long as we are in the level of backwardation that we're in, I'm staying away from that trade. I promise I said this a couple of weeks ago. I actually had somebody reach out, somebody that you would consider pretty knowledgeable around VIX, and ask me what I thought of selling the March future when it was at a 1-point premium to April. And the question was, how bad do you think I can get hurt? And I said, well, I don't know how bad I think you can get hurt, but I wouldn't be doing that with spot VIX up at the level that it's up. And now that we're, a week and a half away from the VIX future settlement, the March VIX future settlement, time's running out on those futures and they're starting to catch up with the spot, but it's still like 7 or 8 points. So the short volatility trade is basically, for lack of a better way to put it, it's kind of impossible right now. And then finally, before all of this happened, everybody was talking about the dent, or I guess the bump in the curve that is October relative to September and November in the futures contracts. That thing is maintained, and it's I thought it would come in some when it looked like Biden was going to knock off Bernie. It still hasn't. So that's something I want to keep an eye on for the longer term, and is a way to keep an eye on something that has nothing to do with coronavirus.
You mean there are things that have nothing to do with the coronavirus madness? You're right. We'll get to that in a little bit. That was one of the interesting nuggets that resonated to me. I know has been on the top of the mind of a lot of our listeners of late. But before we get to that, I am now joined by the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com by way of Carmen Lion Capital. Mr. Meatball, we missed you down at RMC this year, sir. How are things in the land of the pit?
Well, it's good to not be there because I'm home to trade. I cannot believe these markets. It's been something to watch. I gotta say, I was really kind of contemplating what this compares to, what we're dealing with in terms of the magnitude of the moves back and forth, the way vol has moved, the way vol has stayed bid, the amount of times we've kind of seen 40 and held 40, and today the VIX touched 50, and the way we've gotten there, right? So in the last since 2008, we've touched really 50 twice, and both took place in the middle of kind of a more of an effect of the systems themselves not working properly, right? We had the Volpocalypse, right? Where we had the China when, they could not get the actual trading systems to work right, or, the flash crash. The last, what I would say, real extended period of contango that we had, or not contango, backwardation, like real backwardation, was really 11 when we kind of set that record. So I'm looking at a market, and we have not seen the VIX touch 49, 50 in, obviously when the VIX gets to 50, there's fear. You hate to use the word logic. Move to 50 has been organized and orderly, right? It has not been, it has not been, the systems are broken and we can't get any liquidity. It's been in periods of time in which I think is different than the last few times it's gotten you. And so the only period of time that I can really compare in my own trading history to what I'm seeing, it takes me back to 2008. And so as I look at what I'm seeing a market that could take us back to a 2008 type of scenario, more than, which I don't know that and I don't mean it's different in that there's no truly mortgage type systemic issue. There's government debt. Who knows what happens with that? But there's the way the markets are moving, the way volatility is getting bid, the way, experienced traders are looking at things saying, boy, this could get really bad. And a lot of other people are saying, this will be over with a little government intervention. It has wafts of kind of the front end of the trading in 2008, minus I think all the mortgage debt fears. This feels a little more transient, but with the speed with which the market has moved up, with how electronic everything is, could we see something bigger than we have seen since 2008? I'm going to say yes. And are we set up for a black swan type of scenario? Could we, which really 2008, a meltdown type of scenario where, we do get to quote unquote those unthinkable levels, maybe down to, 2,000, 2,200, 2,250 in the S&P totally. And that's the first time that I feel like we could make that kind of move, call it a 40% drawdown, 50% drawdown since kind of things really calmed down with the economy in 2000, kind of 2011, 2012. And so I think a lot of people are failing to recognize what's trading in front of them. And what's trading in front of them is a market that has moved 4 to 5% a day for over a week. And that is a rarity.
So what you're saying is that you're all in super bullish right now, is what you're saying?
I'm saying sell puts.
Yes, sell all the puts. The closer to the at the money, the better. But you're right. We are looking at some unprecedented, at least for the last decade or so. You got to go all the way back to 2008 to really see anything that is remotely analogous to what we're seeing out here. You mentioned that front end, and the front end of the futures curve is certainly still, I think the technical term is crazy town. The cash just crazy bid over the futures. We were talking, a week or so ago on the show, and everyone was kind of hand-wringing saying, my God, these futures, the cash, I should say, is well above the futures. And that was at about 15 points. We're not seeing quite that level of craziness right now, but it still is a healthy premium. The cash, right about an 8-point premium to that March future, and right over 14-point premium to that April future. So just kind of crazy town out there. Mr. Rhoads, we didn't get a chance to pick your brain about that. So let's start with you on this. First off, have you been kind of concerned as much as everyone else was of late the last week or so about this crazy chasm between the cash and the futures, mitigating somewhat now, but still there? And then also, what are your thoughts on what we've been seeing out there in the VIX futures over the last couple of weeks, sir?
Well, the futures are, like I said, they're finally catching up, and I like the word chasm an awful lot. The chasm is just based on the short-term memory of most of the traders that are out there. The three of us were around in 2007, 2008, and we know how silly it can get, and how much higher spot VIX can be than the futures contracts. We also, and keep this one in mind, I can't remember if it was October or November of 2008, but I believe we had like a 10-point change from a Tuesday close to a Wednesday settlement. There was one that it's like we were in the 50s and the settlement was in the 60s, or vice versa. It'll be really interesting to see what, when we get, on the 17th, St. Patrick's Day is going to be ruined for a bunch of Chicagoans now. The day before we get the March 18th VIX settlement, it'll be really interesting to see what the options are pricing in as far as overnight risk with respect to how much VIX may change, but how much it may change between the spot close and the futures close. And I will be out of the way and allow that to just be an interesting exercise to watch between overnight. But that's the worst case scenario we ever had with respect to that, for lack of a better way to put it, the goofy settlements that we get sometimes in the CBOE product. I think a lot of people are going to be fearing that when we get into not next week, but the week after.
You can say that now as a former SEBO guy.
I know.
The goofy settlements.
Periodic goofy settlements. But the goofiest one ever was I want to say November of 2008. And it was almost a 10-point difference between where the futures and index went out the night before and the next morning. And we're kind of in a similar situation to where that could happen once again.
Going to be a lot of stone-cold, sober Chicagoans that morning who probably usually like to spend their St. Patty's Day out there having a green beer or two, and instead are going to be glued to their screens, probably popping some coffee and some Tums, as opposed to the usual libations of St. Patrick's Day. Mr. Meatball, same question for you. Have you been watching this curve? Obviously mitigated somewhat, but still, I think crazy town, like I said, is a technical term there for the front portion of that curve. What's catching your eye there in the VIX futures land this week, sir?
So why the curve is mitigated is the giant move we got in the March futures today. We got the March future is up all today, almost as much as the, or maybe more than the cash VIX itself. It's up. I'm looking. Yeah, it's up about the same as the cash. So, in percentage terms, that's going to end up being a lot less. It looked a lot worse when, but I got to say these moves in VIX futures themselves is way out of the ordinary relative to what we've seen on, on past moves, even if you look at the move in the VIX futures when we had our first big, huge 100-day that was a massive surprise, 2 weeks ago, Monday, they did not make we had the VIX up a massive amount. They did not make this kind of move. And so, what you're seeing is the VIX market saying, hey, you know what? This 40 VIX that we were fading might be justified. And in fact, when VIX was 39 a couple of days ago and 34 a couple of days ago, it was way too cheap. That is what you are seeing and why the market is acting the way it is. VIX futures still have 2 weeks to 2.5 weeks to expire. It's not like they expire tomorrow. And, we're getting almost 100% correlation today. And April is moving at over 50% of the index too. So this is pricing itself like look out. That's what I'm seeing.
Yeah, a lot to unpack there. Before we move off the futures really quickly, a lot of people were asking us over the course of the last couple of shows, how much of this crazy premium that we're seeing out there in the vol, and particularly out there in the far off portion of the curve, as we talked about before, how much of this is corona driven? How much of these sell-offs, how much of this vol is corona driven? And are there perhaps other shoes to drop? Are there maybe domestic political concerns there as Sanders was resurging and other things like that? Clearly not the street's favorite candidate out there. So a lot of other maybe elements were being sprinkled into that equation. People have been asking us for a while, how do you quantify that? How much is it? It's clear there was something, but it wasn't really easily quantifiable how much. Interesting presentation down at RMC. It was from, I believe, the Goldman researcher, and he was talking about that bump we've been talking about for a while here on the show, that little bit of premium, that little bit of juice that's up there right around the election time in the VIX futures that we've said many times on the show. Maybe a little bit overdone, but maybe not given in light of what we've seen of late. But he pointed out that in the teeth, the worst of the corona sell-offs, we saw that chasm, that gulf between that election bump actually get exacerbated, not mitigated. And so that's not what you would expect if this was entirely corona-driven. So that pointed out to him, and I think it's pretty clear evidence that there are other things at play here with this sell-off. Of course, you saw the movements this week as well, coming out of Super Tuesday, and the moderate wing of the Democratic candidates making a bit of a comeback, of course, giving us a bit of a rally out there. So clearly there are domestic political considerations in there as well. Exactly how much, still yet to be determined, but enough to be felt and be displayed and be seen out there on that VIX futures term structure. Let's move on out to the options land now. And Spikes options actually doing a little bit of paper out there today. Looks like a 1x2 players coming back, doing that April 17, 25, 1x2, going up a total of 6,000 contracts, doing it 2,000 by 4,000 earlier today. That OI still right around that record level of 95,000 contracts out there. Let's break down the top five positions out there. Number one with a bullet. It's pretty sizable. Pretty much half of the OI are the April 25s with 50,001. Is that one lot you, Mr. Dr. VIX? Are you the one lot on the 50,000?
I'm always the one lot. I always follow the big trades.
You're always good for a one lot at the end. That's you.
That one or two lot at the end, that's always me.
When I see those go up, I'm like, that's Russell. I just know it right away. That's your signature trade. If anyone has a signature out there, sir, that is you. What they call you, piling on, Mr. Piling on? They're 50,000. I'll take one more.
I'm Dr. One Lot.
All right, number two, no one lots here. 25,000 of the April 17, so you didn't pile into this one. You just took the far upside, Mr. Dr. VIX. Number three, 8,950 of the March 23s. Number four, 4,479 of the March 16s, and rounding out the top five here, 4,000 of the March 25 calls. Total, like I said, 95,000 contracts open. 95,000 calls and one put. That one lot, that's you, Mr. Doctor.
Oh yeah, that was my first shot at getting short volatility, buying a put on the spikes.
Your first ever short vol trade in your life. One lot put out there on spikes. Let's move on out to VIX options land. As you might expect, doing a wee bit of paper today, coming into, as of a few minutes ago, at about 1.6 million contracts on the day. The ADV ticking up is pretty much double what it was. Remember when it was had broken 400,000 to the downside? It was languishing around 300,000 or so. A little bit north of that now, closing in on 800K, 797,000 is the ADV out there right now. Before we break down what's going up today and the other days, let's break down some top 10 hot positions out there in VIX options. Lance, started at number 10, cost you about 152,000 contracts to break into the top 10 in VIX land these days. That gets you all the way to the March 28th, listeners. Number 9, 158,000 of the March 17 puts. So our first put on the list here. Number 8, 170,000 of the May, or only May on the list. May 35. Cost you to take it back. A few more Mays. May 35 calls. Number 7, 172,000 of the March 20 puts. Number 6, $1.86 of the April 23 puts. Number 5, 191,000 going back out to May 32 halves. A little optimistic there. They seemed optimistic. Now, not so much.
One quick thing. The April one you just said, that's not the standard. That's the weekly.
You're right. Expires on the 1st. You're right.
Sorry. I was waving. Nobody. If anybody heard a little whoosh, I was like waving furiously. I was like, and I thought that was pretty interesting when you sent this out, that we've actually got 186,000 of the April 1st 23 puts open, and these are weeklies, and we hadn't seen a lot in the weekly space for VIX. So.
Spoken like a true weekly rundown. Is that going to consist of your weekly rundown?
That is my weekly rundown right there.
I forgot to play your music, so you have to forgive me, sir.
Sorry to interrupt the flow, but I did want to point out that was April 1st, not the straight up Aprils. Here it comes.
Now, Russell's weekly rundown.
Now it's official. Now you can regale us really quickly. Just to give us those April weeklies again so it can be official.
He did that because this will be the last time I ever interrupt him when he's doing the rundown. The April option that was just mentioned, it's there's 186,526 of the VIX weekly, the April 1st, happy birthday, Mom, 23 puts. And that is a huge increase over the previous week. I'll bet you if you do some digging, you're going to find those are teamed up with some, maybe with some March options or maybe standard April options or something like that. But
even more surprising, your mom's an April Fool's baby?
She is an April Fool's baby.
That's an unfortunate birth. That must be hard.
It's very hard.
It's kind of hard to celebrate or take anything seriously on a day like that. But that also gives her a lot of license to lie about her age, right?
It does.
She can say whatever because April Fool's, no one's going to believe you. Anyway, there you go. So there's our taste, a little bit of flavor, listeners, of the old Russell's weekly rundown here. Number 5, we got 191,000, like we said, of the May 32 halves. Number 4, also 191,000 of the May 28s. Number 3, over 200K, 201 to be precise, of the March 16 puts. Number 2, 264,000 of the March 25 calls. And number 1 with a bullet this week. Doesn't seem like that much for all the volume we've seen. Only 332,000 for the number 1 spot out here in VIX land with the March 24 calls. Again, 332,000. Total, the OI is strong. It shows the paper is all over the place. It's just not a ton on the top spot here. 10.1 million open total in the OI. It's about 6.1 million on the calls and about 4 million on the puts. Mr. Dr. VIX, one day in the future, Dr. VIX, if you ever finish all your legion of studies there. Does this surprise you that we have so little for the number 1 spot? I mean, obviously the OI is strong. People are trading it up, or is that kind of what you expected? They're not just going to pile into one thing. They're kind of trading everything these days.
Well, the thing is, everybody always likes the slightly out of the monies, and slightly out of the money keeps changing. So when you have something like that going on, I'm not totally shocked that it's spread around an awful lot. Because again, when you have a market that's moving the way that the March, April, and May VIX have been moving around, what you might want to play either for VIX going lower or another leg to the upside, those strikes keep changing. So the volume is being spread around equitably. Much like, let's call it a Bernie Sanders VIX market.
Are you implying there are some progressive socialists lurking in VIX land?
VIX is feeling the burn and spreading it out across all strike prices.
A little bit of VIX Redbird. You get a call, and you get a call, and you get a call. I like that out there. Feeling the burn in VIX land. Maybe, who knows? Maybe that's the title for our show today. Looking at what's lighting it up out here in VIX land today. Total about 1.6 million contracts on the tape, so roughly 2x that ADV already on the tape. Listeners, as you said, we're selling off pretty hard. The big contracts out there, the April 22s having done about 135,000 coming to Showtime. The July 28 calls going all the way out to July and some upside. $120 of those bad boys, and 103,000 of the March 24 calls. The big print, and that's April 22 puts. Almost all that came in one print. They went up 125,015 for 60 cents. Pretty much through the bid. Those are late, though. A lot of late prints. Have you noticed this, Mr.? I've been talking about this a lot lately on the show. Have you noticed this, Mr. Once and Future Dr. VIX, that we're seeing just a plethora of late prints out in VIX Lane? I think there's something afoot to that. So I think they're trying to make my job harder is what I'm asking.
Yes, they're trying. It's all about you, and they're trying to make your job harder. No, I think what's going on is you're seeing a lot of things being negotiated out in that pit. A lot of, working with your broker upstairs, your broker in the pit, and the market makers, and probably making sure they have all their I's dotted and all their T's crossed before they put these things on the tape. So, back in the day, we used to deal with something called fast market. I don't know if they really have that anymore, but I would say the guys in the VIX pit periodically are dealing with the fast market these days, which means things are going to get put out there just a little bit late.
Well, this week is understandable. Every other week, maybe not so much. I think I know what's up. I think it's mostly aimed at me. I think it's coming from Tubby. I think we can just blame it. It's Tubby. He's got an axe to grind against me out there. He's putting up everything late. Just to cause problems. Also saw, like you said, the July 28s lighting it up nearly 22,000, going up in one clip, $2.30. Right on the bid there as well. Nove 37 halves. All these going up. Looks like in pretty much one funky spread. So about 5-1. Of course, they did more later on, but still 21,907 of the Nove 37 halves going up for 78 cents. Over there as well. Through the bid there as well. Another big print, July 28th, going up today, 97,000 times. That comes up to the total now, we said, of 120,000 or so have traded on the tape today. So just a lot of crazy prints. 837 halves, 38,000 of those bad boys going up again through the bid. 820 puts, 36,100 of those going up. Also, this is not related to those, just a separate put trade going up for 40 cents, actually on the bid at least. So, and also laid out there yesterday. Interesting, Monday and I think Tuesday or Monday and Thursday, both doing exact same amount of paper, 1.71 million contracts yesterday out there in VIX land. The big contract was the May 32 halves, a total of 136,000 trading yesterday. But the big individual print was the APE 50s going up for 55 cents. Pretty much big market, 50,000 times. That was opening, so someone deciding to open a little bit more upside. Maybe our friend 50 Cent deciding to open up some more and paying 55 cents this time. Either way, big print on the 50 calls out there. Also looks like maybe could have been an 8 May risk reversal, though could have been some other legs lurking there as well. 50,000 almost of the 823 puts going up for 65 cents through the bid against about 50,000 of the May 32 halves going up for $1.45 right on the bid. Those were going up as a spread. Also seeing a kind of a funky, I guess you can call it a four-way. We got APE 32 halves, 28s, and 30s all going up about 30,000, 36,000, and 45,000 times against 42,000 of the March 25 puts. So maybe a bit of a funky three-legged vertical up there against some puts. So all sorts of funk going up out here this week, as you would expect. And also 43,000 of the June 27 calls going up for 2.25, lifting the offer there against 43,000 of the May 32 halves, and also 32,000 of the April 22 puts. So maybe a bit of a funky diagonal / roll against some puts. Wednesday was the laggard of the week. Only a meager 631,000 contracts going up on Wednesday. 20,000 was the big print of the March 28 calls going up for 341 through the offer this time. Don't see a lot of that this week, but seeing that this week. 10,000 also the June 29s going up for 99 cents, right mid-market against 10,000. Actually, no, these are not a spread. This is a separate spread here of the August 28s for 10,000 of those. And a bit of a funky, looks like a very wide, almost head-scratching call vertical. 10,000 of the May 22.45 vertical going up for effectively $1.98 or $2.98 out there 10,000 times. I gotta love those ones where they sell that other leg 23 handles away from the bottle leg. That wasn't enough. If you like a little bit of a tighter call vertical, we also saw the March 25 32 half going up about 10,000 times. That one as well for looks like a 269 or so. It's like paper probably buying that guy here. But again, both legs kind of lifting the offer. So a lot of call verticals going up in March. On Wednesday, Tuesday, like I said, exact same paper as Thursday in terms of volume. 1.71 million contracts going up. The big print, 87,053 of the June 27s going up for $1.15, slightly towards the offer. That also saw that around the similar times, 84,000 of the May 28s also going up for $1.20 out there as well. So two massive prints. 170,000 contracts in those two alone. Also saw huge prints in the April puts, 68,000 of the April 22 puts going up, as well as the April 23 puts also going up. These are also your weeklies here, expiring on the first here, Mr. Dr. VIX. I was trying to remember your handle. Your Dr. VIX. There we go. For 90 cents. So huge, 136,000 there as well. And maybe some upside, maybe 50 cent closing out here. The May 27s going up for $1.70, 65,000 times. A couple of those, another 65,000 lot. Second one going up for the March 27s. Those going up for $4.50. So a little bit better than 50 cents he paid for it. And then Monday, let's round out the week here. 1.1 million contracts on the tape there. The big contract, 102,000 of the March 20 puts, including some big prints of those. 43,000 for 41 cents, kind of mid-market going up there as well. Another 21,000 lot going up later. Again, a lot of big prints out there. Also saw some April big put prints as well. A lot to parse. Let's go back to the greasiest, the Meatball. Mr. Meatball, did you watch, obviously you were watching VIX options out there. What was catching your eye? Did you see our friend 50 Cent up to anything fun this weekend? And what were you and the Pit Crazies up to out there this week, sir?
Yeah, the nice thing about this type of market is, not to get in the face of this. There's some really interesting things. Biggest trades I've actually seen have been mostly in SPX. There was yesterday there was a giant buyer of way out of the money puts, and then the day before there'd been some call spread buyers. I had not seen 50 Cent come in and close anything yet. Did I miss something? Did he? Because that's entirely plausible. I had on. I'll tell you what's worked is kind of. When things looked a little calmer, but we were still crazy, I really like doing butterflies that are in the money relative to the, kind of at the money relative to the future and completely in the money relative to the cash. Things like, I closed this morning, like the 25, 35, 45 fly. Today we've been looking at the 35, 45, 55 butterfly in the VIX. VXX, it's been hard. If you went long, it's been hard to not lose. And long dated stuff, a lot of traders like those way out of the money puts in things like VXX and UVXY because they want to take advantage of quote unquote roll yield. Vol is up so much in those way out back months that you have an amazing opportunity to, if you hedge stuff off short term, to take off that back stuff. Because I'll tell you, like right now, VXX is $32. The 20 puts are $3.55. We could be down $7, and I think those would still be about $3.55. That's how high the implied volatility is in some of these back month options, which is why I find what I'm looking at kind of so fascinating and why I see so much kind of trading opportunity out there. So I would definitely go out and take advantage of these really high implied volatilities in some of these names. That's what I'm seeing in terms of the vol and in the pit chat. So, and I gotta say, with the curve the way it is, and we're definitely trading that election curve. And Russell, it is in a little bit. That election curve in VIX has come down a little bit. It got up to about 2.5. And then right before Super Tuesday, and is now $1? Let's call it $1.80. I still think that's a way out of whack. Me thinks that when Biden gets the nomination, it will go to kind of normal levels and settle in at somewhere around positive 50 cents. So if you're looking for a non-vol explosion correlated trade, I would point you toward that OCNOV spread as really an opportunity that I find really enticing.
Non-vol correlated. Not a lot of those lurking out here this week. I was distracted, by the way, by Mr. Rhodes' Twitter game here, putting out the old, what is that? Aquatine Hunger Force? Is that what that is?
Aquatine Hunger Force.
The Aquatine Hunger Force.
I'm the Shake.
You are the Shake. You got the greasy meatball, and of course that sweet guy with the goatee, whatever his name is. I like his goatee game, so I can certainly empathize with him. He looks like he's a very dashing and also intelligent fellow. So I don't mind embodying that character out there. Check out Mr. Rhodes' Twitter. I think we'll retweet it out there as well if you haven't seen it out there as well. A fun little image. But Mr. Rhodes, all that aside, anything catching your eye out here this week, aside from your weekly rundown, of course, which you've already played our theme music for?
I knocked that out very quickly. No, just, I think what Mark was saying as far as the nomination, the next 2 weeks we've got, I think if Biden knocks the cover off the ball in the next couple of weeks and basically takes everything, that you might see that that spread between November and October come in somewhat quickly. You can also take a look at it's been very similar with September versus October. And I think you can play it either way right now. But I do think that thing will narrow down maybe back to normalcy if we get Biden as the presumptive nominee. Another thing, you were talking about the 20-strike puts. I would not be the least, in March of 2009, market bottomed out at 666, my favorite number. And the S&P did nothing but go up 50% over the course of 2009. VIX never ticked below 20. And I would not be the least bit surprised, at least through early November, if VIX stays at least above 20. So I think looking at the 20 puts is something to maybe sell even farther out, with the intent of them expiring with no value whatsoever. I think that's something for a longer-term volatility player to give some thought to.
So you think we're definitely in a new vol regime then for a while, not dipping back below 20 anytime soon?
I would not be the least bit surprised if we don't stay above 20. And, another thing is if we get through this coronavirus thing and it's just kind of lurking around, people are going to start worrying about it when flu season comes back around next year. A lot of these things have lasted more than 1 year.
So why were you scribbling earlier on your notebook your crystal ball pick of 1380? Are you trying to fade it? Trying to fade yourself?
That was my crystal ball pick for the end of this year. That contest, which I'm sure nobody is doing well at right now. Year.
Yeah, I think it's a challenging one. We've had a couple of players actually, I think, win a couple of years in a row, so that's a little bit eerie out there. I'm not sure. I'll have to check in to see. I don't think anyone has a 40 handle in their prognostication right now.
Wasn't it the same guy like 2 years in a row?
Yes.
Guy out in Australia or something?
Yes.
So you got to pay attention.
You do. Neil out there.
I'm lurking around.
I believe he's out there in New South Wales, and we do owe him some interesting fun prizes. Getting things shipped. I'm going to have Simon just come to his house and just have like an hour-long vol discussion. That'll be a surprise. What do you think? Sydney, New South Wales, all very close.
I'll take it with me. I've got an Australia trip planned this summer.
There you go.
I'll do that for you.
There you go, Neil and all the other vol winners. Russell will come to your house.
I'm going to come to your house. I am the Ed McMahon of vol views.
You won't have a giant check, but it'll have a sweet Russell's Weekly Rundown music playing, and you could discuss. So whatever floats your boat, downside puts, Aquatine Hunger Force, whatever lights up your particular trading screen. Speaking of lighting up trading screens, hopefully it's to the upside. You've been fading it. That's our old friend VXX. Because, man, this sucker is up, and up quite a bit. What a distant memory all those Feb 13 puts seem like now in hindsight. VXX coming into the later portion of the show here, threatening a 32 handle right now, listeners. About 31.85. That's up about eight handles from where it was this time last week. Not exactly surprising given all the volatility we've seen out there in the space, but still, for all of you who like to just fade out there in VXX land, this has been a rough couple of weeks. The ADV out there, though, is exploding. It's over 500,000 out there right now. Today, so far, 768,000 contracts on the tape earlier today, and probably more than that right now. Looking at the top positions out here, number 10, really quick, March 16 puts, 47,000. Number 9, 48,000 of the March 23 calls. Number 8, about 50,000 of the April 20 puts. Number 7, 55,500, 555 of the March 15 puts. Number 6, 58,000 of the March 30 calls. Number 5, 58,800 of the March 22s. Number 4, 62,000 of the June 31 calls. Number 3, 68,000 as well of the April 25 puts. Number 2, 73,000 of the April 25 calls. And then rounding out the top here, number 1 with a bullet, 76, almost 77,000 of the March 25 calls. So we talked about it before. There are upside plays to be had here. It's not all fading all day long. And looking at the OI right now, it's about 60-40, at least for the top 10 positions here, calls to put. So people are liking themselves some calls out there. Mr. Meatball, I know your crazies like themselves some VXX. You kind of just alluded to some VXX earlier. What have you and the crazies been up to out there, and what's been catching your eye out there in VXX land as it continues to roar away from those old Feb 13 puts, sir?
Yeah, like I said, it's been a lot of ride the wave higher. Everybody needs to be familiar that we can carry this the other way, right? With a nice contango, VIX can, VXX can go higher and higher and higher. I fully think that even if we do gyrate around here a little bit, VXX could go to 40. And there's not a lot of good reasons for downside. Vol could go higher. Skew's really steep. If you are into trading call spreads and bull butterflies to get long, they are setting those up for you. And so that I see a lot of opportunity in VXX. And if you're sitting here thinking, I'm going to fade VXX by buying out of the money puts, as Russell and I said, I think that is a giant mistake with implied volatility levels where they are. Long-dated implied volatility is expensive. And that's something that I think traders need to be aware of and recognize and be prepared to not get beat on.
Also need to be aware that it is, I know it's hard to believe, but it is indeed earnings season, listeners, and there are some big names still popping off. So if you want to take a break from the miasma of coronavirus news out there, you can look at a little bit of micro out there. Monday was Tilray. Tuesday, a lot of big box retailers, Target, Kohl's, Nordstrom's, HP out there as well. So some big names on Tuesday. Wednesday, Dollar Tree. A Zoom Video, Campbell Soup. People stocking up on some canned goods these days. Maybe Campbell Soup felt the love out there. Thursday's Kroger and Costco. Don't try to buy TP at a Costco in Chicago. You'll fail because they're all cleaned out. So maybe some interesting nuggets from the Costco numbers as well. You can find all those earnings move results reports over there. TheOptionsInsider.com is the place to go for all of that. Now I want to keep on going right on into your questions, a little bit of your volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, welcome to the Vol Voicemail. It's a portion of the show where you guys take the reins, your questions, your comments, your insights. Seems like a lot of you are excited to have the once and future Dr. VIX back on the... Oh, I guess I shouldn't presume. Some of you are. Russell's been tweeting out fast and furious here during the show. All sorts of fun images and pictures. Your old buddy Kid Sinclair saying he's back with many exclamations and many Ks to it, so he's excited. Edward the Willing says, do not, in all caps, do not let them take your soul. So watch out, Russell. I may try to take your soul at some point.
I am here to vanish your high score on the Gallagher machine right behind you.
Yes, we do have a sweet Gallagher machine in the studio now, listeners.
They can take my soul, but my initials are going to be on this screen until you unplug it and reset it.
Now we talk about the... That's actually designed to avoid that. That's like George Costanza machine. You can move it all over, cool, and you could keep the scores. But that, we talk about the rankings of the crystal ball and how important that is. But at the end of the day, it's who's the top of the Gallagher leaderboard. That's the most legit guest on the network. Jim Carroll, he just wrote hooray when he said the whole gang was back together out there in this. We got Frank chiming in. He wants to know, he says, Simon, we haven't gotten to the crystal ball yet. Frank's getting ahead of us. He says, Simon was closest to VIX in the crystal ball. Does he win? Well, it looks like we got Simon Defense Force out there. We haven't gotten a crystal ball yet, Frank. I don't know who's winning yet. But yeah, Simon was the closest. But remember, our margin of error, our margin of victory, it has to be within 1 point. So nobody wins if we're all outside 1 point. So he's the closest loser, maybe. But no. Lancaster, I like that name. Sounds like it's Game of Thrones. Lancaster wants to know, or just good old War of the Roses. Have you heard any more about the status of SVIX? I was talking to some people about this actually down at the Risk Management Conference this week, and it does sound like behind the scenes people are a wee bit enthused about this product, which, when I first heard it, I think we took a nice standoffish approach because we want to see how these new products unfold, and this is certainly proven to be a contentious product category with the regulators. It seemed like it might be a bit of an upward battle for a new company to try to introduce something like this, but it sounds like behind the scenes some folks are intrigued about this. Mr. Meatball, you talked about this before here on the show. I haven't heard anything new yet. Have you heard anything new for our listener Lancaster about SVIX, Mr. Meatball?
I want to interrupt us a little bit. I don't know if you saw this, but while we've been talking, 200,000 of the March 35 puts have traded, $2.85. $2.85. They're trading size up. And on top of that, we got 155,000 of the March 30 puts that are going up as well. So I've just been kind of monitoring those, trying to figure out what's going on. Just giant fading volume in the March 35 puts in particular. $2.85 for size. I don't know if we reported on that, Mark.
We did not. No, I'm looking at it right now. Thanks for bringing that to us attention.
Giant volume. And I know everyone wants their questions answered, but I look at that trade, and the only thing I can think is that is absolutely some sort of fade trade. I'm wanting to see if let me pull up a time in sales. If there's is that a put spread? Is that the 35-30 put spread? If you said
it looks like it went up 35-30, yeah,
buck
about the same time
or something like that. You could talk me into that if I thought we were going to completely tank.
It looks like 66,000 of the March 42 half puts going up around the same time against 100,000 of the March 30 puts also at the same time. And then about 167,000 of the March 35 puts out here. So a bit of a funky ratio kind of fly, maybe, sir.
Yeah, and you've got the 42 puts versus the 35 puts. So it looks like they're a 42 put buyer versus a 35 put seller and a 30 put buyer. So and like you said, on a ratio, it's like a 1/2 by 3. It's a 1/3 by 2 is what it is. What it is, Mark. It's somebody is basically playing VIX to kind of ease back to 30 to 35. It is literally a 1/3 by 2 in VIX. It's actually not a bad play. I kind of like it. That's a really interesting play. I might really like this the more I look at it.
Yeah, it's kind of fascinating looking at the different legs to it. Mr. Rhodes, you were talking about how we're in a new regime, not going to be testing 20 anytime soon. Sounds like our friend here thinks, well, maybe not 20, but we'll be testing something down a little shy of 30 by March. What do you think of that, sir?
What happens if we're below 30 at this after this thing kicks in? I think maybe doing the math, they'd still be okay.
Yeah, they'll be good. I think they'll be good on this because the ratio
think anywhere below maybe even 40, they're okay with this. And if you see something like that, you've got the cash and you've got the account permission to put something like that on. No reason why you wouldn't. But I think I think the worst case scenario is we go down an awful lot, but they still pocket a little bit of change. But what they're really hoping for is something in the 30s, probably through settlement.
Yeah, it's got like almost 1/3 on the 42 halves versus the 35s, and then like a kicker of 100K of the 30 puts. So that puts them in good stead if you get down there, sir.
I can tell you if they decide that if they're thinking about holding this through a settlement, no sleeping on St. Patrick's Day, and not because you're having fun.
That's hopefully this person is savvy enough to know to avoid that, because that could cost you many millions of dollars on a couple of points on a whim, and there's no rhyme or reason to it. Do not, if you're listening to us, don't do that. Close it out and then have a couple of beers and you could be happy. But yeah, this is an interesting one. Good job bringing this to our attention, Mr. Meatball here. Some late put action here. Funky flies. We like those. Like the ratios. We were just talking about maybe will there be some downside and how some size put prints were going up here this week. And now we got a funky fly to sink our teeth into. But now it's time for you guys to sink your teeth into our predictions. And maybe, who knows, maybe have some fun with them too. As it is time for that most dangerous segment. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball. Frank will be excited. We'll see. We're breaking down Simon's predictions here and everyone else. Last week it was me, it was the Rock Lobster, and it was Simon on the show here last week. Simon was feeling the most vol of the bunch. He was at a 43, which as of right now, VIX just ticking about 5 handles off out there. Spike's lurking at about a 48.25, so he's about 5.25. It's Frank chiming in. Simon is my hero. Give him the win. Maybe Frank is Simon's dad. I don't know, but someone really likes Simon. So Simon's probably asleep right now, but when he hears this, I'm sure he'll have a smile on his face. I was in the middle there. I was feeling slightly less vol than where we were about last week, a little bit, about 32.45. Clearly not enough vol for all of us. And the Rock Lobster was feeling the most fade to the downside. He was at a 29.5. So clearly we're not in a 20 handle here. We're not even in a 30 handle here. We're pushing getting out of the 40 handle. But right now, Simon, how's this, Frank? Simon is the least loser. I can't give a guy who's 5 handles away the win, because then all of our other guests will be like, what are you doing? We have clear procedures, clear rules in place here. Got to be within a point. So he is not the winner, but he is the least loser, which means Mr. RHOADS, I should say, the ones on future Dr. VIX, that opens the way for you, sir.
Cool.
What are you feeling? I'm gonna put you in here actually as Dr. VIX. How you like that? So I know you were infamous, some might say notorious, in your previous incarnations on the show here for just wantonly buying all the upside you could. That play looking pretty good right now, Mr. Rhodes. Are you feeling more upside? What are you feeling right now?
See, first off, being the Washington Generals of this game, I feel that any time that nobody has declared the winner, I should get the win, which means I probably would have won twice since the inception of this show. I'm really bad at this. So
you're looking good this week, though.
I'm looking good this week just because by default, because I'm the American Simon. I'm gonna say 37. I think we drift a little bit lower, but there's going to be concerns still out there, and that actually gets us down to about where I think the March futures are. That's actually the logic behind it.
What fun is logic, sir? You got to go dig. You got to get deep. Actually, the March futures are 39.5 right now.
As bad as I am at this, it's kind of sad that I actually try.
Got to dig deep down into the inner colon. There is where you got to find the true vol here. All right, so I was in second quote unquote place. I guess I'll go next here. Let's see. Next week we got a lot of worms potentially turning. We have this whole domestic thing. What's going on that political front? Will Biden surge? Will Sanders have a resurgence? How will that impact us? Right now, listeners, we're still selling off pretty hard. Most of the major indices off. The S&P off 3.7%. The NASDAQ off 3.8%. The Dow off nearly 3%. So that sell-off, that seemed like it was mitigating at the top of the show. Not so much. It's heading back down to the dark side with a vengeance. So not exactly looking very rosy on the horizon. So right now, VIX still at about 48. I'm going to say we're pretty close to where we are right now this time next week. I'm vacillating on how much. I'm going to say, I was going to go, you know what? I was going to go 45. I'm going to change it now to about 43. Let's go 43.5. How's that? So nice kind of middle of the road, but a little bit less vol than we are right now, but still obviously frothy, still obviously very elevated. All right, Mr. Meatball, I bought you a bunch of time here. Because your cohort last week screwed the pooch. He got you in last. What are you feeling for next week, sir?
I got to say, I'm really concerned for Monday. Right now, we're trading below the low close. We're not quite, which was, I believe, when when was that? My system. That was the 28th. So we're trading below the 28th close. We're not at the contract lows or the cycle lows, about 255. But I'm looking at a market where if we have a much worse day than we did yesterday, I think we could be in a position to have a limit down open on Monday. I'm not saying that's definitely going to happen, but we continue to see this kind of pain, and then we get some more bad news over the weekend. You're going to see a lot of people running for the hills. It is not good to close on the lows on a Friday. That does not that leaves people all weekend to sit around and think about what they're scared about. And you could see just a terrible open. So I got to say, I think we could be right back here. Let's see. Russell said what, 39, 38?
Russell said 37. I was at 43.5.
All right. And we're back above 50 right now as I'm talking. I am gonna say, we're gonna touch it at this rate. We're gonna touch 60 next week, but I think we end right here. I think we're gonna be up 49.38.
49.38 for the meatball. All right, listeners, uncharacteristically low for Dr. VIX at a 37, playing the opposite of his usual game. Me playing the Goldilocks there in the middle there, 43.5, and the Greasy Meatball to the upside at 49. You two switching places the way that you guys usually line up here. Unfortunately, listeners, that music means we've come to the end of what an epic journey it was today. Hopefully you enjoyed it. Seems like from all your comments, a lot of you are enjoying having the once and future Dr. VIX back on. Let's see if we can rope him back in again in the future. But before we go, let's go back around the horn. Mr. Dr. VIX, let's start with you, sir. If folks are intrigued, they want to reach out to you, they want to see what you're working on, maybe they want to catch up with your latest comings and goings and your musings, where should they go? What should they do, sir?
Well, I publish on TABB Forum. Going to write something about volatility. It'll be out next week. I am putting the finishing touches on a new book about VIX, which should be out in August or September. That just got sent off to the publisher. And it is Untitled VIX Project 2020. And there'll be nothing about the current move in it.
So it's done. It'll take another 6 months to get out?
Yeah.
You might want to. Yeah. Can you add that time? Can you add another chapter?
I know.
It's like half the presentations at RMC had obviously not updated their slides to account for the last couple of days, and it makes it look a little different.
They had to go through compliance, which is something I don't know how to do anymore. I'll say anything.
So TABB Forum is a place to go. And What's your handle on the old Twitters again, sir?
It's just my full name, Russell Rhoads. And I tweeted a few things about using the @options handle today, which, man, I don't know how you got that, but good for you.
We're pretty cool here.
Yeah, you are.
We have it there. We have it on StockTwits as well. So we're doubly cool. @Russell Rhoads is the handle. 2 S's, 2 L's. And then Rhoads, not like the island or the road, but with an H.
No E.
No E. All right, give him a follow there to see all the latest data and get an update on his book. And Mr. Meatball, sir, if I'm intrigued, I can't think of a better time to want to join something like a vol trading club. If I were so intrigued and wanted to do so, sir, where would I go? What should I do?
Yeah, next Thursday, we don't have it on the site, but by the time this posts on Monday, you go to optionbit.com. We're going to have a webinar next week on trading VIX. I just wrote up a blog post comparing how, the Cubs can be like a black swan event. And so make sure you go check out the blog. But you go to optionbit.com, sign up for our next big event, and make sure you are getting all of our emails so that you are seeing all of this great stuff that we're putting out as it comes out. And actually, incidentally, Russell, I just signed the paperwork yesterday to do a second edition of my book, Trading Options for Edge. So I'm going to be adding 3 new chapters and updating a couple of pieces of the old book. So everybody be on the lookout for that. VIX now 52.5. So, yeah, I mean, we are set up for a really, 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 really bad Monday if we continue to close this way.
Yeah, not looking good out there for the perma bulls out there. Maybe a little bit of a worry-filled weekend. A good weekend to have some protection, shall we say, in your back pocket, or perhaps already have closed out some of your stuff so you could weather these storms. But we got dueling books on the horizon in the VIX land. Should be fun. Check them all out. OptionPit.com is the place to go. And on behalf of the Greasy Meatball and the once and future Dr. Bix, and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for sending in so many questions. We would have got to more of you, but the meatball interrupted us. But it was good stuff with that VIX fly out there. So we'll get to more of your questions next week, unless there's more craziness, which there might be. We'll see you back here next time for more Volatility Views.
Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the SPIX Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIX. Learn more about SPIX at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.